this hot sheet, I discuss home price outlooks from CoreLogic, AEI, and Zillow, plus the dream of 5% mortgage rates. Today is Tuesday, August 1st, 2023. I am Byron Lazine, and the hot sheet starts now. Good morning, and if you're returning, welcome back to the hot sheet. Hit the thumbs up for me if you're returning. If you're new to the hot sheet, you definitely want to subscribe to the channel so you don't miss another one. We do this every single Monday through Friday that the markets are open, 9:30 on the East, 6:30 on the West, and the replay is always left up each and every single day. BAMX members, of course, get the daily download from the hot sheet. And today we're releasing a new code, 10% off of your BAMX membership by using the word HOT. Easy to spell, easy to remember. H-O-T, hot. Even though here in the Northeast, the humidity is gone. I don't know. I know it's hot in many places around the country, but last couple of days in Connecticut, it has left us. What hasn't left us is a lot of home price outlooks. I've got 3 to share today. I believe that they're all quite bullish. So they're all in the optimist category. CoreLogic being up first. They just released this morning their newest HPI, home price index, U.S. home price, or insights rather, for August 2023. Okay, through 2023 of June, with forecasts through June 2024. Home price nationwide, including distressed sales, increased year over year by 1.6% in June 2023 compared with June 2022. On a month-over-month basis, home prices increased by 0.5% in June 2023 compared with May 2023. So there you go. CoreLogic showing us that home prices are month-over-month continuing to go up. They're well ahead of Case-Shiller. Obviously, Case-Shiller's data is quite lagging. But available for you down below in the daily download is this, their forecast. They've got current side by side with forecast. So month over month at 0.5%, and year over year, CoreLogic has us up 1.6%. So they do not have us down year over year right now on their home price insights. Okay. And then looking forward next month, they believe from June to July that we will increase another 0.6%. That's their projection for the next month, 0.6% going up. And then year over year, they have us at 4.3%. Now, this is down a little bit from their most recent projection. Recently, last month, they had us at 4.5% year over year, but still very healthy. Anything up over 3% is a very strong home appreciation market. So that's what CoreLogic has us in at. Let's take a look and see what AEI has us in at. This might be the most bullish of any outlook that I've seen. AEI Housing Center recently announced a significant upward revision to its housing market outlook as it expects U.S. home price growth to heat back up. So they're looking forward and saying, hey, we don't see a strong seasonality decline, maybe a seasonal decline, but not as significant as last year that put us into negative home price appreciation, according to forecasters like Case-Shiller when they look at quarter 3 and quarter 4. At the heart of its upward revision, the persistent issue of limited housing supply is why they believe these home prices will go up. And I'll give you the number here in just a second. There were 613,791 U.S. homes for sale in June 2023, down 49.7% from the 1.22 million for sale in June 2019, according to Realtor.com. With the exception of a few overheated markets like Austin, housing inventory remains incredibly tight. Okay, so where does AEI have us coming in at? AEI, national year-over-year house price appreciation for this past June was 2.9%. It's up from 2.1% a month ago. So a little bigger numbers there than CoreLogic. Okay, down overall 14.3% from a year ago. This is on appreciation, not home prices. Okay, so that's different, obviously, on the amount of appreciation. Our analysis of Optimal Blue data indicates that year-over-year home price appreciation will increase to 4% for July 2023. It's probably the biggest number I've seen for 1 month. And they also have us up 4% in August 2023. So they're expecting hot numbers, code HOT for BAMX, of course, if you want 10% off. They're expecting really hot numbers on home price appreciation for both for both July and August. Our base case projection for year-over-year home price appreciation to be 6% and 7%, 6% by the end of 2023. And then they expect home price appreciation to be 7% in 2024. These are monster numbers. These are super hot numbers coming from AEI. You do not see a lot of home price outlooks saying, yep, 7% for next year. Most are closer to the standard 4, 3, 2%, maybe even, a bearish outlook of flat or 1% on home price appreciation. Goldman Sachs would be leaning more towards that camp. We've looked at their outlook a number of times. AEI says no. We believe next year is going to be really robust on home price appreciation due to the fact that we don't have inventory. They also reference low unemployment rates. Okay. Pinto, who's with AEI, says the low unemployment rates are another key factor fueling the housing market's momentum. Strong job numbers have instilled confidence in consumers, leading more to take the plunge into home ownership, thus further stimulating demand and putting upward pressure on prices. Meanwhile, the relatively low number of foreclosures have helped to maintain market stability, even as some markets experience a price correction last fall. So when we're guiding somebody through today's market, really low unemployment rates, a rise in wages since pre-pandemic that have gone up 20%. They're not going up that fast, and that's obviously what the Fed wants to see, but there has been an increase in wages. There's low unemployment again. There's really historically low foreclosure numbers. There's very little homes in forbearance. There's very few homes that are underwater today, as opposed to 2006, 2007 timeframe when people were borrowing 104% on their home and were underwater day of closing. All of these variables and on top of no inventory on single family housing units, no significant inventory on single family housing units coming in the near future, are reasons why AEI believes we're going to gain 6% on home price appreciation by year's end and another 7% in 2024. If you agree that low unemployment is going to stick, if you agree that low inventory is going to stick, that strong job numbers are going to continue, that these all-time low foreclosures are going to stay at that level, then the 7% next year would make sense. And guide a client through that exercise. Do you believe you're buying below the next peak, buying today in the summer or the fall of 2023? If you believe in these things, then you definitely believe you're buying well below the next home price peak. So AEI, one of the most bullish. I've got the daily download again. Here it is down below for you that shows where they sit for both 2023 and 2024 respectively. And probably the most bullish that I've seen from, respectable housing source like AEI. Now let's go to everyone's favorite, Zillow. What do they think? They've got more data than anybody. Lance Lambert wrote a piece on Fortune. By the way, Lance will be coming on to At Knowledge Brokers podcast. Go over to At Knowledge Brokers podcast and subscribe. He's definitely coming this Friday. Little hiccup last Friday. He'll be on the pod this Friday to discuss the overall housing market, state of the housing market with us on Friday. So make sure you subscribe there. He will definitely be on without some unforeseen emergency, of course, but the confirmation is in. He'll be on this Friday at Knowledge Brokers podcast. He wrote a piece in Fortune covering what Zillow believes. Zillow is so sure that U.S. home prices have bottomed that it just issued a bullish call for 48 housing markets. In February, Zillow economists made a bold call that U.S. home prices had bottomed. They would proceed to climb 0.5% over the next 12 months. This is not as big as some of these other numbers we just looked at. But the months that have followed, U.S. home prices tracked by the ZHVI have stopped falling. And between February and June, they rose 4.8%, much more than the 0.5% they had projected back in February. The rebound coincided with Zillow repeatedly revising its home price forecast upward. The latest revision predicts that U.S. home prices will rise 6.3%. This is more in line with AEI. So you've got Zillow basically validating what AEI is saying. Pretty close here on the numbers. 6.3% between June 2022 and June 2023. That's above the 5.5% annual increase that national home prices have averaged since 1975. So over the next 12 months, Zillow and AEI both believe we're going to have abnormally large home price increases that beat the average of 5.5%. That might be an email subject line for real estate agents. Since 1975, home price appreciation has been annual increasing 5.5%. The next 12 months are going to be bigger than that. Now, that's a run-on sentence. It's not an email subject line, but you can break it down and get the gist, right? Why home prices will rise more over the next 12 months than the annual average since 1975. Something along those lines to start to educate your database, start to educate maybe even a seller in your market why they want to be on the market during this uptick, right? With low inventory. The second quarter is traditionally the hottest time of year for sale housing market. And that rule proved to be true for 2023. It's one of the reasons, like, okay, I'm throwing a lot of, bullish reports out here, but I'm still a little conservative when it comes to quarter three, quarter four. I still think we're going to have a seasonality, slight decline of some sorts when it comes to quarter three, quarter four. It makes sense when you look back the last 20 years of history. If you look in your MLS quarter three, quarter four, I would say 90% of them in quarter four anyways, you do see some type of decline in prices. That's what we see nationally. So it makes sense that it would be the case in most MLSs. All right, so what comes next is less than certain. This is what Lance writes, and I agree. As buyer demand typically begins to wane in the summer, but this year, like a test of the classic unstoppable force meets an unmovable object paradox, that trend will be set against incredibly scarce new listings. So that's the variable. This is Jeff Tucker from economist from Zillow saying in his report, this is the new variable that we haven't really tested. This little inventory, this record low new listings coming onto the market. Okay, so Zillow economists expect national home prices to rise 6.3% over the next 12 months. You can see here they're basically bullish on all of America. There's a couple little spatterings of red in there, one in Louisiana, one in New Mexico. Basically, every major market across the country, they've got up and up big over the next 12 months on home prices. Their forecast model predicts that 48 of the nation's 200 largest housing markets will also see increases of 7% or more over the next 12 months. Okay, so 1 out of 4 of the nation's 200 largest housing markets are going to see over 7%. Those are huge numbers. Those are hot numbers. Code HOT down below. BAMX, get 10% off of your subscription. You don't want to miss BAMX for a variety of reasons. We're holding back on BAM Camp, just a couple more days for BAMX members only before we release it to the public. That event is going to be in Naples, Florida, September 20th. Okay, you want to join me and our entire list of speakers there. Lisa Chinati, Tom Toole from Knowledge Brokers Podcast, Taya DiCarlo, Matt Leonetti doing opening and closing keynotes, Haley Ingram from Coffee and Contracts, Eric the Broke Agent, among many others, breaking down all things marketing, all things knowledge broker, all things branding, all things what you need to do to be a great real estate agent in 2024. It's BAM Camp. It's in September, and BAMX members have first access to it and 25% off. So use your code HOT to get into BAMX. You get 10% off of that, and then go sign up for BAM Camp and you get 25% off of that. We're literally talking coffee money here. And with these home price appreciations, your commissions are only going to be getting bigger anyways. Let's just go get more of them. What we don't have more of are affordable homes. As home prices continue to go up and inventory continues to lower, we're going to be in a situation where we don't have that starter price home. They classify a starter home at $240,000. How many starter homes are in your market? I know Kaufman County, Texas, right? I get it. Or OKC. There's some of these markets that are outliers. But most of the country doesn't have $240,000 starter homes that are move-in ready, that are, that are financeable even. And that's just the reality of the market. NAR, existing home price sales right now. Okay, we've reported this. NAR's existing home sale prices for June, right? We're at $410,200 for the median sale price. How many $400,000 homes do we have left? Well, according to Zonda, far less than we did back in 2018. A share of new homes priced below $400,000. 2018, almost 60% of new homes were priced below $400,000. Today, that number is 37%. This is a dramatic difference. The cost of land, the cost of building, the cost of competing, right? And just the overall lack of inventory. Well, if competition is going to drive existing home sale prices, new is always going to be more expensive than existing. That's just the way it is. And so with all of these great bullish outlooks on home prices, I encourage everybody they know to become a homeowner. It's how you have financial stability throughout life. It's how you have an asset that you can really count on. The last 4 decades, 30 to 40% increases each and every single decade. All of that's great. And I love the outlooks today where it's like, wow, my real estate's going to go up 6% this year, 7% next year. I love that as someone who owns homes and works with a lot of homeowners. It's a great thing for people that own the asset of real estate. But for those on the outside looking in, trying to get in on a starter home, this is the reality that the $400,000 home is disappearing right now. This is where we need to stop with this, we're helping housing affordability by building apartments. This is where you're pushing people into long tenured a relationship with being a renter, as opposed to finding ways to bring in more inventory at an affordable rate to really help that lower price point in the market. This Zonda national average of new homes, chart here, that this will be down below in the BAMX daily download, as well as all of our sources. This is eye-opening to me. Look how fast it's happened from 2018 to today. In just 5 years, go from 60% share being below 400,000 to now 37%, and continuing to decline, by the way, especially if the bullish reports from CoreLogic, their forecast from AEI and Zillow that we all just looked at, happen to be true. So I wanted to just sprinkle a little of the reality of what happens the more these home prices go up. And it's why the fear-based content on YouTube does so well. Home price is about to crash. It's done well for 3-4 years. The reason it does so well and so clickbait, there are people cheering that on so they can get into the game. It's a sad approach, as opposed to helping people. Hey, let's get you in a position where you can be a homeowner in your market. Let's create an opportunity through maybe more income or less debt where you can go out and do the things that you want to do, which include home ownership, right? It's just a couple different ways to look at it. But unfortunately, that's kind of what gets the basement dwelling clicks on there. And it's an easy avenue to play into people's fears. So less homes under 400,000, home prices increasing. What would happen if mortgage rates fell to 5%? Housing Wire put out an interesting piece. This is off of a Zillow survey that was just done. Nearly 40%, Zillow says, of homeowners with mortgages that have rates above 5% said they would consider selling in the next 3 years. This is no, they're just considering selling. 40% say, I've got a rate over 5%. I'm considering selling in the next 3 years. But additionally, the survey found that about 80% of mortgage holders reported having a rate less than 5%, while 90% reported having a rate less than 6%. Almost 1/3 reported having a rate less than 3%. Mortgage rates first, okay, they'd be these ones that are above 5% rather would be more than twice or nearly twice as likely to say that they plan to sell their home than those that are paying below 5%. So we'd get a lot of this inventory off the fence if we get down to that 5%. I believe it'd be even more than the survey. Once you get, and my magic number has been 5.5, once you get close enough to 5, you can buy down some rates. I believe even more 4.5s who then maybe, if this doesn't happen for another year of living in a house too small, another year of living in the location that they really don't want to be in. I think you start to add more time to their discomfort of where they are right now that plays into why they actually want to move. And you're going to open up the floodgates of more activity. Most sellers are also a buyer. It's why we're hurting so much right now on inventory. Nobody wants to trade in that low rate to get into the higher rate. So if you get closer to 5, I think 5.5 to me is the number where you start to really see fluid movement in the market. Senior economist at Zillow Home Loans says we expect mortgage rates may notch down slightly as inflation comes under control, but they are unlikely to return to 5% in the near future. That means that many homeowners will move only for major life events, newborn, retirement, think marriage, think these types of things. Over time, homeowners will likely accept higher rates as the new normal, but until then, the market could remain challenging for home shoppers who see fewer options and higher prices. Nearly 1/4 of homeowners are considering selling their home in the next 3 years. This is all homeowners, or currently have their home listed per Zillow survey, significantly higher than the 15% of homeowners who said the same thing a year ago. So that number is going up. See, more time in a house that doesn't fit all of their needs is going to create opportunity for sales. In fact, the share is even greater among mortgage holders who have a rate above 5%. Again, 40% of those say they would consider selling their home in the next 3 years. Of the homeowners considering selling in the next 3 years, 2/3, 2 out of 3, cited a desire for an upgraded home, nicer features as the reason. Half said it would become because they expect to get more money now than in the future, and 45% said a growing family would influence their decision. So the more time people stay stagnant, stay frozen, stay locked in to where they are in the market, the more those frustrations start to brew up. And when they get that first opportunity of an escape, could be 5, could be 5.5, like I believe, they may jump on that opportunity. That opportunity does not look like it's coming today. The 10-year Treasury note is sitting now above 4 again. We've been flirting with 4 a lot the last couple months. We've been between that 3.8 and 4% range, and we know that that means inflated 30-year fixed mortgage rate. Yesterday, according to Mortgage News Daily Survey, we came in at 7.04, slightly down from 7.05 on Friday. The 30-year fixed weekly surveys at 6.81. It increased from the week prior. If we continue to sit here with a 10-year over 4 during this week and a 30-year daily survey over 7, expect that 30-year fixed weekly from Freddie Mac to be close to 7% again, like it was the week of July 13th at 6.96. That's the reality of where we're at right now on the 30-year fix, but we can always dream about the future and what 5 and 5.5% rates would do to the market. Can also dream about the Tom Ferry Summit. I've been dreaming about it every night. I'm going to be there August 22nd to the 24th. If you don't have your ticket yet, we've got a link for the lowest ticket to the summit down below. You get $100 off. And if you're a BAMX member, you also get access to the BAM Bash, which is on night 1, August 22nd. It's the Super Bowl of all real estate events. I'm there every single year. Love for you to join me at that. All right. That's it for the hot sheet. Hope you guys have a great Tuesday. First day of August, so start it strong. 5 months left in the year for real estate professionals. That means you got 3 months to make up where you want to be for 2023, because we know November and December are really 2024 numbers. All right. Hope everybody has a great Tuesday. We'll see you back here tomorrow, 9:30 on the East, 6:30 in the West. Until then, toodaloo.